All right, we're back for another episode of the YVR REMO show. We're going to hit on a real hot topic here, a topic that we've touched on in the past. And believe it or not, we are back into subject-free offers. Hard to really believe I'm saying that right now, and being the time of market we're in, given interest rates and just the economy in general, it is a little concerning, to say the least, that we are into another subject-free world. But that is the truth, and that's what we're going to chat about today. And really, just want to focus on a number of things, especially the reasons to probably consider not going subject-free. I think that's something we really want to hammer home, is just some of the risks that we would come across when going subject-free. We'll touch on the new rescission period in BC, which essentially allows buyers to go subject free for a 3-day period of time. But there are, again, some risks to that, and we're going to touch on that in detail. Additionally, we just want to touch on maybe some ideas and reasons why it may be okay to go subject free, and the select buyers that would be in a position to do that. So just to kind of get started, I'll pass it off to either Tyler or Derek, who's joining me today on the show, to just kind of maybe explain. Derek, maybe you can kind of just jump in and explain, like, what is a subject-free offer for those of you that are maybe new listeners and new to the real estate industry as in general, and maybe have never seen such a period of time like this.
Yeah, I mean, maybe before I go into that, just to touch on like the market and reason why we're back in this position. And I will say, I don't know this for a fact, but it seems like this is a bit of a nationwide issue currently. I'm sure, there's one-off towns and municipalities that aren't having this problem, but it's a major, major lack of inventory. There are far less houses listed than we would typically see, especially in a spring market. Spring market in our industry, mortgage real estate, is when things typically do pick up. People, start thinking about moving, what have you, and the inventory just isn't there. People are not listing as much as they used to be anyways, and we've had a massive get off the fence, I guess you could say, rush of buyers, people that are wanting to get into the market, which is fueled because it seems like we're at the top of interest rates. And if we are at the top of interest rates, we're probably at the bottom of property values. And of course, that's the perfect time to buy a home. So everyone that was a little bit skeptical for the last 6-8 months, getting pre-approved, getting their ducks in a row, everyone is rushing in trying to get a home. There aren't a lot of homes listed. This is creating bidding wars. We just had a property in Walnut Grove I heard of, 64 offers on one house. I don't know how much it sold for, but pretty dramatic. So that's what's happening. And obviously, when you get into a competitive market for anything, and there's multiple offers, your best leg up is to make your offer more competitive, which is typically either paying more or removing subjects. And subjects are basically conditions on a purchase. So if I wrote an offer to buy Tyler's house and I said, hey, Tyler, I need 1 week to go figure out my financing. I need 1 week to get an inspection, do an appraisal, what have you. If someone else came in and wrote the exact same offer, same price for Tyler's house, and they didn't have those subjects, Tyler's obviously going to accept that offer because it's pretty much a guaranteed sale. Whereas if he accepted mine, I could go to the bank. The bank could say, no, we don't like your income. We don't like your credit, what have you. And then I'm walking away. I actually didn't commit to buying Tyler's home. So subject free is essentially removing any conditions to purchasing the home, and you're committing typically from day one. There's a rescission period that we'll talk about. But yeah, just a little bit of an overview and background on that piece. And maybe from here we can kind of just dig into, strategically, like when and where it's a good idea, when it's a bad idea, and just some due diligence that you should be doing before you ever even consider a subject-free offer, because there's certainly risk in doing that.
Yeah, I mean, why don't we just touch on the rescission period, because that is a key difference in this market that we didn't have back in late 2020, early 2021, when this was a really big deal. Pretty well every offer was going subject free. So why don't we just quickly toss around this rescission period and then jump into some of the reasons why, a number of reasons why we wouldn't recommend doing this.
With the rescission period, it's essentially like it's a new piece that started this year, and it's basically like almost like an out clause, right? Like Derek was explaining how subjects work, and the way I've always explained subjects to buyers is that's essentially like your return policy, right? As long as you're within that period and something pops up where your financing can't get approved, the inspection fails to your standards, appraisal comes in light, as long as you're within that window, you can essentially pull out. what the buyer rescission period has done is it's tried to protect more buyers and more people entering into these subject free offers, and getting themselves into tough positions where they're unable to complete the purchase. So it's a 3-day period. The BC Real Estate Association has a calculator on their website that typically your realtor will use. So you'll know from when your offer gets accepted to when that rescission period ends. It's 3 days. And there are only business days that actually get calculated on this. And this sort of acts like that same window of having a subject, except there's a penalty associated if you do not complete. So if you go ahead and I'm buying Derek's house and say, okay, I'm going to buy your house for $1 million, no subjects. Here you go. Here's the offer. In that offer, there will be a bottom section that's written that outlines the home buyer rescission period for 3 days. And if I'm unable to complete, if I pull out before that 3 days, it's not a non-penalizing position. You're going to pay 0.25% of the purchase price. So if I'm buying for $1 million, I write that offer, and let's say my financing gets declined, we get a rush appraisal and it comes in light. For whatever reason, I'm uncomfortable and I want to pull out. As long as I'm within that 3 days, I can do that. However, it's going to cost me $2,500 to end up walking away. So it's a no penalty. It's not a free walk away, right? There is risk associated to it. That's real money that you got to cough up. But we were chatting before the podcast because the three of us are having these conversations weekly, almost daily now. In the context of the last dozen years, considering if I was writing on $1 million property this time last year, my deposit on that purchase is probably like $50,000, right? And if the risk to me is $50,000 versus $2,500, that's a different conversation altogether. Obviously, this is real money, but it does offer me, a potential buyer, a little bit more protection.
Yeah, well said. I mean, you hit on all the key points there. There's a really good website through BCFSA that really outlines a lot of the details of all of the details on this program. It touches on a pretty interesting section just in regards to like what property types this refers to. So this is typically pretty much just anything residential. So somebody buying a home that is a detached house, a semi-detached house, a townhouse, really any strata, apartment, condo type property. It's going to fall in this bucket of this home rescission period. It's mandatory. And I guess that would ultimately exclude any sort of commercial type properties. Anything commercially zoned is going to be excluded. So interesting to just, if you're looking for information on this and want to really understand it a bit better, that website is very informative. So yeah, touching on that, I mean, we made some good explanations here. So why don't we just get into where, ultimately why we wouldn't recommend doing this? Like what type of borrowers are we looking at? Borrowers, buyers, typically somebody borrowing is going to be somebody that I would recommend not doing a subject-free offer. And I'll kind of start it off. If you're putting less than 20% down, you're going to be using a CMHC or Sagen insured mortgage. And there's risks there for a number of reasons. One, an insurer is now involved in the review period of your approval. An insurer will not look at your file until there's a live offer. So there's no way of vetting your file through an insurer prior to making an offer. So that's an element of risk, because ultimately the insurer could make a decision to decline your file while you're going through this period of time. So hopefully getting that knocked off the list in the rescission period would be ideal. But sometimes lenders and insurers, they do take longer than 3 days to ultimately get back to you. And they don't work on the weekends either. So it really is a true 3 days. And it's pretty rare that we could get that all signed off in 3 days from an insurer standpoint. They do move a lot quicker in certain periods of time like this. They can, get a bit quicker and get a bit better at that. But ultimately, that would be a risk that we would be concerned about. Because if they say no, there really is no other option. There is no bank that can finance you if you have less than 20% down and the insurer says no. Ultimately, there's no lender really in general. Private lenders, alternative lenders will not finance you with less than 20% down. So that is a big risk for me and somebody I would definitely advise not going subject free unless you're willing to eat that penalty, which we just talked about in the rescission period.
Yeah, I would say on the insurance piece, buying with less than 20% down, I've maybe had a handful of people over the years that have done that. Because, like Dean explained, there's always two layers of approval with an insured mortgage, right? You've got the bank, you've got the insurer involved, and we've all seen it. We've all had clients where the bank is totally comfortable with the borrower, but the insurer sees a different application, sees different risk, and they've decided that they're going to decline the application. And it's basically three strikes, you're out, right? And not every insurer insures specific property types. Banks prefer certain insurers for certain types of deals. And if you move through all three insurers and they decline it, it doesn't matter that bank ABC wants to lend your client the money. If the insurer doesn't, for either reasons with your borrower or with the property, you're hooped, right? And there's really no other solution for you at that point other than significantly eating or increasing your down payment or bringing on a cosigner of some kind.
Yeah, really good points. And I mean, I think just in conversation, right, and this whole subject free topic, like really, no one should have to go subject free. Like if I had it my way, no one would go subject free because you're buying a $500,000 home, $1 million home, whatever it is. Like it's a substantial investment, a substantial purchase. Everyone should have some time to do due diligence to make sure that the inspection comes out clean, make sure your financing comes back as you were expecting it, right? Like these are big ticket items. And if you don't have those subjects in there, taking the rescission period out of the picture for the sake of conversation, because you shouldn't really rely on that from a financing perspective. But no one should go subject free, but obviously we land in markets where you kind of have to if you want to get a home, right? And this is where people end up doing things and taking risks that they didn't want. But I think the best way to look at this, if you're in a position to go subject free, and again, not relying on the rescission period piece, right? Because we want to be fair to sellers and we want to make sure that you've done your due diligence on the finance side before you make a decision like that. But I think just understanding what your worst case scenario is. So I like to be dramatic in these situations. And I say, hey, like if you have the cleanest application I could have ever seen, perfect credit, stable income, down payment is like, we know exactly where it came from. There's absolutely no issues with you or the property. What could go wrong? You write a subject free offer today and you lose your job tomorrow, right? Like dramatic, probably not going to happen. But if that happened, what would this look like for you, right? Like you got to think about these situations, because if something like that came up, okay, you got 25% down, we could probably get you a private mortgage, even if you had no income, right? Like we could probably find some sort of financing. It would be ugly, it would be expensive, but we could put something together to help you close so that you don't lose your deposit and get sued and whatever. Another way to look at that is like, if something dramatic like that happened, do you have people that could step in and support you? Like I ask these questions, they're hard questions, no one wants to answer them, but do you have parents that have a big HELOC that you could tap into to close on this thing with cash? Like, do you have parents that are still working that could co-sign for you, right? And these are just the things I like people to wrap their heads around, because if something like a worst case scenario happens and they know what our next steps are, it's not that bad, right? Like it sucks, but at least we know what our direction is. And like back to Dean's point, if someone was buying a property with 5% down and they lost their job and we couldn't get them financing and they didn't have a co-signer, like that person's literally going to lose their deposit and potentially get sued, right? Because we don't have any backup options. There are no private or B lending options for someone with less than 20%. So I think just knowing your worst case scenario is very, very important. And if you can come to terms with that, then you feel a little bit better going subject free if you have to.
Yeah, good point. I mean, another area that I see a concern with going subject free is a property type, and that being a strata property. So anything townhouse, condo, apartment, that type of a property is going to be a concern for me, given the fact that pretty well every lender will want to review those strata documents, and what's found in those strata documents from time to time can decline a deal for that single reason only. Issues with strata, potential upcoming assessments such as a new roof or a crack in a foundation or a major leak or what have you. These are all things that can be a big concern to a bank or lender and could decline a file for that reason alone. We've seen buildings that get red flagged with the insurers that are instant declines for banks. So these are things that are certainly an area that I would want to have an extra level of preparation for. I mean, given the fact that we have a rescission period now, given the fact that we know there is information on record with these properties from the insurer standpoint, there are things we can do to prepare before going and writing that offer. Quite regularly, we will run a property by CMHC or Sagen to just ultimately understand, is there, a red flag on this building prior to making an offer. So there are things you can do to mitigate that concern, but ultimately that is a big concern for me, and I wouldn't want to be going subject free on anything that's stratified. You know, it's just it's a can of worms that you could ultimately be opening, and not really understanding the risks is something that you just can't you can't ultimately take a risk on not understanding what that could be.
Yeah, exactly. Like the even for a AAA, well qualified, great income, great down payment borrower, there's always risk. And a lot of that risk for that type of borrower is always going to be in the property, right? Because that's the unknown. And we get this conversation all the time, or question all the time, but I'm pre-approved, but I'm pre-approved. And we don't need to dive in deep into what a pre-approval is, but really in most cases, that's simply just a rate hold, where essentially the bank's saying, okay, if everything in this application checks out, we're going to give you X amount of mortgage money. We'll hold this rate for you for 120 days. Even if we go back to that same bank after an accepted offer, they're going to want to start to verify everything. Okay, now confirm the income, send us the job letter, pay stubs, all that. That's an important piece. But what the bank is blind with is the property, right? And the property is the bank's asset more than anything else, right? Of course, they lend to you, the borrower. That's a piece we can, a good, well-qualified mortgage professional can help you verify all up front. But what's always going to be unknown is the property, right? Especially when it comes to strata properties, like Dean mentioned, there could be potential red flags that are unknown. So you want to make sure we can identify those up front. And even buying in the detached market, right? When you're going to make an offer on a detached property, there's something called a property disclosure statement. That's part of that offer, where it's essentially a tick sheet showing you the condition of the home, anything to be concerned about, anything that the seller is disclosing to you. So I use this analogy all the time. You could be Elon Musk, more money than you'd ever hope to spend, more income than you could ever quantify, excellent credit, all the down payment in the world. But if you're looking for a mortgage and you go buy a home and it's got a cracked foundation and that's disclosed in the property disclosure statement, guess what? Your mortgage is declined, right? So that's always the blind piece. And I'll leave you with one personal experience, right? The last home I bought that was moving into as my primary residence a few years ago, when subject frees were happening, offers were happening all the time, I ended up writing subject free on this property. I understood the risks, and we'll go in deeper into how you can mitigate some of those risks. We got the house. I did the inspection afterwards. The inspector comes up from the crawl space and just looks me dead in the eye and says, "You got a pipe leaking down there." And my face went. I felt my heart go into my stomach. I was like, "Oh my goodness! This is." How is this happening to me, right? But in the end, it only ended up being like a pinhole leak that was replaced with like a $30 job. The seller did it for us. It was totally fine. But for that 5 minutes of sheer panic, my whole financing life flashed before my eyes. So even if you're well qualified, which I like to think I am, there's always going to be an element of risk.
Yeah, it's a good segue into just property issues in general. That's a good point. What we've seen in the past too is just stuff around non-conforming properties. We've had, people buy a duplex and find out, well, it's not actually zoned to be a duplex, so it's non-conforming. We've had declines for those reasons, and there's really not much you can do in those situations. It's not a funny situation, but it's something that, if you don't do your due diligence, you don't have a really good professional realtor on your side and working with you through these items, then you can find yourself in really big trouble. So, property issues are going to be top of the review. And looking at stuff like non-conforming, not going to work. Unpermitted renovations or additions to homes have been issues in the past where, maybe somebody added a significant amount of square footage to their home, did it unpermitted, having issues with the municipality, potentially having to demolish the home that they've built because they did it unpermitted. These are things that, aren't going to show up in a property disclosure statement if the property owner isn't disclosing it to you. And doing some digging and again, working with a professional agent is going to uncover some of this stuff. And then the last one is just, we've seen previous grow ops. So homes that were registered as a previous grow op, fully remediated, everything was done perfectly. Instant decline for banks. They don't care if it's fully remediated. They will not touch a previous grow up. So those are things that I've seen come up quite a bit. Derek, I'm not sure if you have any other property issue type things that have come up on your end, but those seem to be pretty big ones.
Yeah, no, I mean, I think just like as just listening to you guys talk, we're probably a little bit tainted, I would say, in a good way, but it's because we've seen all these different scenarios, right? So if you put yourself into like a first time home buyer, or it could be your 10th home that you're purchasing, you probably still haven't seen a lot of these scenarios, or you've seen the situations that have gone wrong because maybe you were able to buy 10 homes and everything went perfectly, right? And maybe it doesn't seem extremely risky because of that. But this is just where it's really important to work with like a professional that's been in the business for a while. Hopefully they do a fair amount of business, because then they're actively working through these types of transactions and situations. And again, there's pros and cons to this rescission period, but it does take a lot of the risk away. Essentially, if something were to come up or go wrong, that's what it's there for. But for the last few years in these busy markets, like we had to have some pretty hardcore conversations with clients who were like going subject free and attaching $100,000 deposit to their offer without an approval, right? So I think just really working with someone that knows what's up. I think a broker is really important here, not to like just plug brokers, but having a broker and knowing that, if the file gets declined at this lender for this reason, like we have countless other lenders, we have B lenders, we have private lenders, like we have the options and we can navigate that to try to get it done, right? Whereas when you're with just a singular bank and they decline it, I mean, your world probably feels like it's falling apart, right? Where we can typically try to find a solution before we even need to tell you about the problem half the time. So it kind of it makes the process a lot more seamless. But yeah, just working with a diligent broker, like having the conversations. The amount of times I've heard like, oh, my bank said, they asked me for a pay stub and we did like a 5-minute phone call and they said I'm pre-approved, go find a home and come back and we'll get it done. Like that's not a pre-approval, right? And we've done podcasts on a true pre-approval. Like we do so much legwork up front because we value our client situation. We value our referral partners, right? So when you think about like a broker as a business, we get business from realtors, financial advisors, referrals from our clients. If we were not doing our job properly and we were sending clients out there pre-approved and then it didn't work out, like it's a very, very bad look on us and we probably wouldn't be in business for very long, right? So we put so much time and effort into our pre-approvals because it makes the latter half of this process go just clean and seamless, and that's what it's all about.
That's a good point. And anytime we're going through a pre-approval process, where we have control in the matter, where we have control to give you really good advice from a due diligence standpoint, is things like income and credit. And there are income challenges that would be a concern for some borrowers going subject free, even with a high level of due diligence from a pre-approval standpoint. And that's going to be self-employed clients, that maybe write down their income significantly, which happens to be a lot of self-employed clients. Clients that maybe have undeclared income, cash income, really just anything like in that self-employed kind of world could be a concern. And going through some of the worst case scenario options like alternative lending, private lending for those types of borrowers, if we get into trouble, is a good conversation to have. So you're ultimately fully prepared with what all your options are going into an offer situation.
Yeah, I'm going to hammer on the banks a little bit and just obviously big up the broker community a little bit. Like everything with going subject free is all about risk mitigation. And if you're asking yourself, well, I'm pre-approved, why isn't all of this signed off? If you think about it from the bank's perspective, right, they're running a business. When the client comes to them for a pre-approval, they don't want to pay their staff, their underwriters, to fully review a full application with income, credit, down payment, all of that kind of stuff up front, when maybe only 25, 30, 40, 50% of those applications go live. So from a pure business perspective from a bank, they don't want to pay their staff to go through all these deals that might go nowhere, right? So a lot of them now just have automated, you see them all the time, pre-approved in a minute or less, 2 minutes, punch in this application, we'll issue you a pre-approval. If that's what you're working with, definitely you're not writing a subject-free offer, right? Or you certainly shouldn't be, right? And, the other reason to work with a real qualified, good mortgage professional is they can provide options B, C, and D if option A falls through, right? Part of the benefit of working with a mortgage broker is you can have those options, right? With a bank, it's if you're declined, so, too bad, so sad, I'm sorry, we've got our shareholders to look out for here, we've got our guidelines we can't break for this reason, that reason. Good luck, we'll see you, on your merry way you go.
Good points. Yeah, we've said a lot here. Of course, a lot of this could just look at, some people could take the approach that we're looking at this from a negative lens, and I think I feel like we're just really trying to prepare people for the worst, and understanding the worst is really how you go through these situations and ultimately work your way through them in a quick and efficient, positive manner. Why don't we just quickly touch on some of the times where it would make sense to go subject free? Because there certainly are buyers that it would make sense to go subject free. And that could be somebody that has all cash and a lot of cash. That's typically somebody that's obviously not getting a mortgage. They're comfortable buying the home in all cash. They have extra cash if something goes really wrong, such as maybe not a pin drop of an issue in a pipe, but a major bursting pipe and mold issues and what have you. These are things that could come up, but they're comfortable being able to mitigate that with cash that they have in their savings accounts.
Yeah, I guess my only feedback, like the cash piece for sure, and that's where I think this whole rescission period is like someone that is actually in a position to go subject free and they're aware of the risks, like they can't really go subject free anymore. Like they can't have that leg up because everyone has this rescission period. So now you're just forced to basically pay more than you probably needed to because you can't legitimately go subject free. Everyone has a 3-day rescission period, as far as I understand. I guess my only feedback on that is outside of just simply having cash, just like I said, like knowing your worst case scenario, right? Like if someone's putting 35% down and we have a blunt conversation saying like, hey, if everything goes wrong and we can only get you private lending and it's going to cost you like a 9% rate and 2% fees, like, are you okay with that? And if they say, yeah, I'd say, okay, like you're probably okay, right? Like let's do a review of the property. Let's make sure it's something that at least a private lender is going to finance. But that would be the only other situation that comes to mind for me that, again, just someone that is extremely aware of their worst case scenario and comfortable with it.
Yeah, absolutely. And just to kind of piggyback on like the risk mitigation and what plan B looks like, quite often if we have borrowers that, may or may, we wouldn't recommend going subject free based on their application, or there's only maybe one bank or one lending option for them. The conversation is then, okay, well, what do you have family, right? If you got into this type of scenario, you need to put an extra 50, 100, 150, 200K down. Is that available to you? Is that available to you? If not, probably don't want to do that. Do you have a family that can co-sign, right? And just to be clear, a lot of times, back in the day, if your parents owned the home, they co-sign on your loan, you're approved. There's a lot more that goes into it now. They have to bring income to the application. They actually have to bring strength, and all their debts are going to get factored in too. I'll just touch on my own personal situation. While we were comfortable going subject free is because we had a larger down payment and we were fortunate to have maybe backup family help if something went awry. I mean, nothing did, thankfully, but we were comfortable with that because we knew that we had a substantial down payment that if everything went sideways, there was B or private lenders available so we could complete, not lose our deposit, or we had family that could step in and help either hop on an application on a cosign or kick in extra down payment should we need it. So you just really need to be clear on do you have help? Like, is there something that can help you mitigate that risk either from a cash standpoint or a co-borrower coming on the application?
Yeah, 100%. I went subject free on a property too. I actually didn't get the house while back, and same thing. Like I had a conversation with my parents just to say, like, if something goes wrong here, like, can one of you guys jump in and co-sign, or can I tap into your HELOC if I need to, right? Like just having those conversations up front is an important piece. So yeah, I think we've kind of labored this one. It's a good conversation because it's active in our market right now. If you're a client or a realtor and you just don't feel like you're getting this level of attention because, and again, there's a lot of moving parts in a mortgage application, right? Even on a clean application, these are conversations that need to be had in this market. If you don't feel like you're getting that level of attention, definitely reach out. We're happy to chat, provide a second opinion, what have you. If you guys have any questions, please reach out. That's what we're here for. And Dean's got one more piece here before we end off.
Yeah, just one tip before we end off. If you are, going subject free and ultimately, you don't have all your due diligence done in that rescission period, but you're still going to move forward and remove the subject and make it a firm sale, just make sure you have your agents put a clause in the contract that will allow you to get access to the property after that rescission period if you still need to do due diligence and ultimately get financing, because financing will require an appraisal in most situations. It will require you to enter that home, and a lot of times when people remove subjects or ultimately go subject free in the past, sellers won't grant you access to the home once it's firm. That does happen. So most agents, most professional agents, this would just be an obvious tip too, and you wouldn't have to really worry about that. But it's something I've seen cause issues. So I just always want to point that out there. And other than that, yeah, it's been a good episode. It was a timely one. It was needed. And if you have any questions, like Derek said, don't hesitate to reach out. We do appreciate the support. We do get a lot of messages, and thanks for hosting these episodes, and we love to do them with your feedback. So if there's any feedback that would be helpful for you that we touch on, please don't hesitate to reach out and put some mentions in the comments. And yeah, we appreciate all of you, and thank you for listening.